In this video, guys, let's look at when should you run your trades. Stick around. Hey traders, warm welcome to you. Right, so I guess this is the second part of the first part. Didn't expect it to be two parts, but maybe it is. Did a video which is probably up already. We talked about different tactics to run your trades. And I thought, hey, actually, you know what? You shouldn't always be running your trades. Let's just clarify that. I didn't want time to do it in this video, so let's do a separate video on this. So when should you run your trades? Again, my opinion, guys, I don't pretend to know everything. I definitely don't know everything. But this is the kind of way that I approach running my trades. And so far, so good. Market's been extremely kind to me over the years. It seems to be working. So let me share it with you and see if it works well for you as well. Okay, so when should you run your trades? First thing is conditions of the market. If the market is sitting around shopping, you don't want to run your trades. You're looking for a little cheeky little mean reversion trade, bang, back to the mean, done. You know, there's no point in hoping the market suddenly changes into a trend type environment when it's not. If it's quiet, if nothing's going on, conditions aren't conducive to running the trade, don't run the trade. Don't try to get blood out of a stone. It's not going to work. Number two, the setup. So the setup is, if you're trading a range expansion, let's say you're trading, I always use this analogy, but it's kind of one of this is a good setup. The opening drive, right? The opening drive, you're trading index future contract, drive the open, pulls back, you buy the first pullback. That's a range expansion type trade. If you're trading, let's say you're trading, I don't know, USD JPY, market pushes to highs, double tops, you're selling that double top, looking for a move back to the mean or the midpoint. That's a mean reversion trade. It's an outside in rather than inside out type trade. So it's a distinct difference. If you have an obvious target for the trade and the idea of its mean reversion, so the thesis of the trade is to come back from a high level to the mean or low level to the mean, yes, it could run on, but the idea is that it just comes back to the mean. So don't run those trades. You take it, you run, you move to the next trade. If it's a range expansion, you don't know where it's going to go, it's at highs, it's pushing, there's a volume behind it, all that other stuff, and there's a catalyst, even better, then hold it. That's a trade to run. Day type, day and week. So what I mean by this is, again, similar, I guess, day type to conditions, i.e. are we inside, are we opening, or are we within the kind of weekly range? So if the range has been chopping around the week, are we in the middle of that? That's probably not worth running. Are we at fresh highs? Have we whipped to lows and a bounce off lows? Lots of different distinctions in the broader picture, the higher time frame picture, that should affect your decision on the lower time frames. And even if you're trading swing trading, guys, it's the same type of thing. The market's sitting there doing nothing for a month and it suddenly does something and it's still within the range of a month. It's not that exciting compared to if it's ripping and going out of ridiculous highs. So day type. Day and week is your day of the week, Harvey. In other words, if you're a Monday, maybe if we're trading on a Monday, maybe there's a lot more action because there's a whole week ahead of it. People are active, people are interested, people have got their money's being moved around, opportunity. End of the week, Friday afternoon, you might not look to run the trade unless, of course, it's a busy day. Of course, trend type day, Friday is irrelevant, but it's been quiet and you come into a Friday, you might be like, hey, people are going home, maybe there's a bank holiday. It's thinking like that. What's going to move this market? And why is someone going to buy it after I bought it for it to keep on running? Why would they pay higher and higher and higher and higher prices? There's got to be a reason for that. Otherwise, you shouldn't be running a trade, in my opinion. And the final thing, guys, is positioning a higher time frame. I alluded to this earlier, but so important this. If the market is in the middle of a congestion zone or a higher time frame and you're taking a trade and you're trying to get these extended targets, you're asking for too much. You're basically saying, okay, I want this price to go to my level and I want it to break out and go into a completely different rhythm and focus and zone. I want it to break out, I want it to push to highs. You're asking so much from it. Now, it's not to say that can't happen, of course, but you're asking for much more than is likely to happen, and you're trying to trade with the odds on your side. If you're suddenly saying, hey, I want this to break out, I want this to do 400 points in a day, and we're normally do 100 points and this and the other, you're going for a long shot. And they're fine, under conditions that's fine, but remember that long shots don't happen. That's why they're long shots, and options will be priced accordingly if you're trading the options market. So think about what you're doing. Think about the higher time frame. Think about the price position. Think about the price position in the trend. Is it a trend? Is it pulling back from the trend? Is it highs? Is it a quiet environment? What's the market like? Is the volume low? Is it summer holidays and the kids are off, which generally means that the market's quiet? What is the situation? And understanding that and having that as an impact, even though you say, oh, I don't trade higher time frames, I'm a short-term trader only, it has a big impact. Because what's happening on the higher time frame means that higher time frame money is trading on the short term that you're trading, and that will have an impact on how far the market stretches, how far the supply demand imbalance shifts, how far the spring stretches and contracts. So conditions, setup, day type, day in the week, market sentiment, position, higher time frame. Line those up and you've got an opportunity to run the trade. Some of those aren't working for you. Maybe think twice before looking for that ultimate higher target. Anyway guys, take care. See you next one. Bye bye.